there's definitely massive markets in this in the big expensive cities, but every city has demand for roommate living.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, excited to have Johnny Wolfe. Johnny, how you doing today?
I'm doing good. Yeah, it's good to be here.
Awesome.
Nice day in sunny San Diego.
Sunny San Diego, beautiful. Well, I'm sure it's a little warmer there than here. I'm in Minnesota, so a couple degrees colder, but yeah, probably pretty close. Hop to the beach, in another. Well, I guess you got to hit a plane first, but it wouldn't take that long to get to San Diego. So a little bit about Johnny. He is the CEO and founder of HomeRoom, which is one of the fastest growing real estate investment platforms in the U.S. After starting his career as a financial analyst in Silicon Valley, he relocated to Austin, Texas to pursue full-time real estate investing, and had a great, maybe terrible, Craigslist roommate experience in 2017. And there he realized there was a massive untapped potential of multi-tenant co-living real estate investing. That's how HomeRoom was born. So now HomeRoom houses over 600 residents in 120 homes across 31 cities, and growing quickly. So Johnny, with that said, why don't you tell our listeners a bit more? Maybe dive into the story, and then we can talk about this HomeRoom.
Yeah, sure. To kind of, just a little bit more color on that. So I was living in San Francisco in a roommate house. That's in San Francisco. That's pretty much how, like 80% of people live. They have pretty good jobs, but rent is crazy and buying a house is nearly impossible. So lived in a roommate house for 5 years and ran it. When I moved out, then I decided I'm ready to increase my real estate investing footprint. I had bought out of state for a number of years before that. And so bought a couple houses in Austin, Texas, decided I would run them the same way I'd run the properties that I was running in San Francisco. And so I rented out each room separately and was able to get, 25, 30, 50% more rent in the same house. And after a couple of years, my returns were really good. And buying in 2015 was generally a good time to buy in Austin as well. And friends of mine were pretty jealous and wanted to invest how I was investing. But there was no way for them to do so. So I thought I saw a big opportunity to help investors make more money and provide really affordable housing to tenants. So started HomeRoom in 2018 in Kansas City. Since then, we're now over 1,000 rooms, growing pretty rapidly. We're in 10 different metros throughout the United States. Biggest subset is in Texas currently, since that's where we started. We're also in the Midwest and Indianapolis and Kansas City, Pittsburgh, and also some Florida and Georgia. So that's kind of
I would have guessed you to be in really expensive cities, not Kansas City and Indianapolis and some of those cities. I would have guessed that San Francisco, like you said, like most people just live with roommates in San Francisco because it's so freaking expensive there. So I would have expected to be in San Francisco, LA, New York City, those markets. What makes like an Indianapolis, for instance, successful versus a New York City, or maybe both would be successful? I'm not sure. What?
Yeah, the way we look at it is that both would be successful. There's certainly more dense roommate demand in more expensive markets than there would be in Kansas City. We see a lot more density of demand in Austin than we do in San Antonio, for example. Hot markets, big markets that are growing rapidly, that have a lot of price challenges for people to live. There's a decent chunk of the population that's living with roommates, not by choice. They have to. But there's still a number of people, even in Kansas City, where we really had our biggest initial market. We baited and we started in Austin with experiments, but we really had 30 homes in Kansas City before anything else. It's still 30 to 40 to 50% cheaper for a tenant to live in a room. And so Some
Mm,
people want to save to buy a house. Some people like the community aspect of living with roommates. There's a lot of different reasons. Some people don't want to like, manage a house by themselves. And, it's nice to have, shared furniture and not have to worry about that stuff. So there's a lot of reasons people live with roommates. It's always cheaper regardless of the market. And so
yeah,
sometimes people would just prefer not to spend that much of their paycheck on housing. And so we've had a number of tenants that they'll live with us in Kansas City, and then they'll turn around and buy after saving for a couple of years. So
sure,
that's the kind of stuff that we're really excited about. So there's definitely massive markets in this in the big expensive cities, but the every city has demand for roommate living.
yeah. Is it the location? Is it more geared towards urban, or have you seen success in suburban, more rural, or is it really geared towards urban?
Suburban and urban both work.
Both work. Okay.
Rural, not so much. There has to be a little bit more density in population than kind of rural. We found that, we have a pretty decent sized portfolio in Olathe, Kansas, which is like 45 minutes out of Kansas City. So definitely good demand in suburbs. Um, and yeah, but rural is a bit trickier. So we
Sure.
stay away from that. Yeah.
And your key demographic, I mean, is it mostly younger people that are the resident profile, or do you have, kind of, I don't know, your older demographic as well?
We initially started with really targeting post college young
Yeah.
professionals. But we, for multiple reasons, decided to open it up, right? There's people that want to save on rent all over. We found that some people in their 40s, 50s, 60s will live with homeroom. The roommates get to talk before someone moves in most of the time. And so we make sure it's a good fit because you're sharing a space pretty close by. So you want to make sure there's some cohesion to the roommate environment. But yeah, we're pretty much equal opportunity. Anyone that would like to live with others is welcome to live at a home room.
So with homeroom, so somebody wants to do it. You guys have the properties that are already kind of set up, and I'm assuming are they furnished or partially furnished? I'm assuming
Yeah, the common areas are furnished
common
in the
areas are
kitchens.
furnished. So somebody goes to your website, and what they fill out a kind of questionnaire or like an application, and then you guys do you do you have technology that's matching them up, or how does that work? Take me through that process. Like if I'm interested, I'm like, hey, this sounds cool. I want a roommate or roommates, right? What do I take me through that process?
Yeah, our website is software that we built. So it allows you to take a 3D tour, allows you to kind of look at the current roommates, allows you to take kind of map out the area, and then you do the online application, fill out some information about your background, who you are, and then we'll take that and see if you're a good fit for homeroom in general, which background, credit, eviction history, and income, and then we'll connect you with the roommates. Our system would send a text directly to the current roommates, and so you'll actually network with them, do a video call, make sure it's a good fit. So that's we don't have any kind of proprietary algorithm around roommate matching. We do have some attributes that each roommate has that we're tracking. But we find that the actual opportunity to meet digitally is more valuable than any of those other attributes that we've been tracking.
Interesting. Um, you started in 2018, 2017, 2018, and obviously we had this little pandemic thing come about. How did that play out? How did that affect you?
Yeah, it was it was weird. It's weird to be
Right?
running.
It's weird for everybody, but
Yeah, it's weird having that. Well, I mean, we had 100 roommates
yeah,
living with each other, and that's not ideal. Group living situation's not ideal for pandemics generally.
right.
Yeah, we were small enough that we kind of ducked some of the biggest negatives. One of the things we saw in the first 3 months is like no one moved in or no one moved out. We were at 100%
Yeah.
occupancy at the time, so we were good. We deployed some COVID protocols. If anyone had it, they were like quarantined to their room.
Hmm.
And we had like, here's what you should do if we deployed testing protocols for the house, and And we have cleaning services that come through once a month. We turn them on and off based on like if houses had COVID inside or not. Um, so everyone survived. Few people got COVID, not that many, surprisingly, because most people were working remotely. And after the first 3 months, things started to. It wasn't truly normal, but it was normal. Our average tenant age is 26, so it was a little bit more normal for that age than it was for kind of older populations where the pandemic was a lot more deadly. And so we started to expand again. So 3 months pause, and then really prudent, kind of being careful with how we were adding new houses and the construction crews and all that. Our construction crews got COVID quite a bit, so that was tough. But yeah, it worked out. It worked out well. It was better to, a lot. There's been some studies about people that lived with others during COVID and how much better they were off because they had community versus being fully isolated. Also with our, and so it was kind of a natural pod community for people. So I
Right.
lived in one of the houses
Right.
at the time, and I'm glad that I did. It was cool to have like friends, and we did like chicken wing Thursdays versus like me staying at home at home in my apartment by myself, which would have
Yeah.
been, I think, really terrible.
Yeah.
So
Maybe maybe
it was
hang out with friends through a Zoom call, right? So, when I think about this, like it's kind of it's really cool, right? It's I can see the as an investor, I can see the return potential as somebody that's kind of you younger. I can see why they'd be attracted to it, but I also can see how it could be such a freaking pain in the butt. Like, how do you get to have it to be so it's not so high management? And you know what I'm saying? Like, you got these roommates that don't know each other. Like, it feels like there could be a lot of infighting. It feels like there could just be, just some issues, big issues going on. So maybe a little bit of a management nightmare. Somebody who's like, hey, I want to invest in this, but ooh, is it going to be too much management intensive for me or for the management company?
I mean, it's a good concern. When you have multiple tenants, there is more complexity, and then we add a service layer on top of it. With we have maid service, we have yard care,
Mm,
but I think the key is there's nothing that's really that complicated as long as you have like the right systems in place and the right processes and the right people. Um, Things just are either they're just they're in a spectrum of complexity, and at the top end is probably like what ChatGPT is doing with artificial intelligence, programming that stuff. But that seems impossible, but they do it, right? And I think creating systems that you know ensure that roommate houses are working is definitely not that hard. It's harder than a single family home. um but
but
it's
you're
not
also
that
getting
much
a lot
harder.
more income than a single family home.
Yeah, I mean, we have a complexity around roommate interactions, but we have a team that has a pretty clear. We have a pretty clear member agreement slash lease. We have a pretty clear FAQ documentation process. We have the way that we have an app you can submit maintenance through. We have escalations if there's roommates issues. So you just kind of like you learn through trial and error, like what you can do to screw up a roommate house dynamic and what you can do to kind of keep it healthy. It's sort of just like keeping any ecosystem healthy. You got to make sure that you have the right controls. If things go sideways, you're fixing it, right? So we'll have our maid service provide us feedback on the cleanliness of the property. We have exterior facing video cameras that'll look at
Mm.
the front lawn, make sure that like people aren't getting crazy and like there's not like a block party in the front yard. Like we don't have cameras inside because we just think that that's
Privacy
a little
issue.
bit too
Yeah.
privacy issue. It's not the vibe we want to put off either.
Yeah.
But it's just really about like, okay, how do we solve this problem so it doesn't create massive challenges?
Yeah. Yeah.
It's definitely 10 times harder than single family property management. But if you work on each problem and chunk it down, things start to get a lot easier. And I'd say like we're deep enough in it that it's working. People aren't they don't come to work hating their jobs at homeroom, which is that means it's working to me.
It feels like as the scale gets larger, I'm sure there's going to be, hiccups along the way and pain points along the way. But it seems like as the scale gets more, that management maybe becomes a little more easier because you can have, I guess, more people, quite frankly, in place to make sure that these tenant issues are getting resolved, that all that kind of stuff is going in. Has that been the case for you?
Yeah, I mean it's a sliding scale on as we scale it gets
Yeah.
easier. You get
Yeah.
like one smart person to handle like utilities, like it's much easier when you're not doing 20 things. I'd say a typical property manager has to do what 10, 15 things. We have to do 60 things
Yeah.
instead, or 75. And as you're able to like give those things to more people, it does become a bit easier. As you begin to have more technology tools, it becomes easier. So it's all incremental. It was much harder in 2018 when it was just me in a basement. In 2019, it's a lot easier now, that we have some software, that we have really smart people that are part of the team, and we've kind of like learned how to do things better and better and better. So
So I'm curious because I'm just trying to figure out how the business is structured because you own properties, correct?
I personally own properties that are
Yep.
run by HomeRoom, but HomeRoom does not own any properties.
Yeah. So you own some properties that are run by HomeRoom, and then other people own properties too that are run by. So if a listener was like, "This sounds really cool. I want to do this. I've got a perfect house right now, or maybe I'm going to buy a house," they could enroll in the HomeRoom, um, program
Platform.
platform,
Yeah,
right?
platform program. Yeah, exactly. We have both types of people. We have people that come to us and say, "Hey, I live in San Francisco. I've wanted to invest in real estate for a while. I don't really know what to do though, or I own a couple properties and I want a better investment platform." Both of those will buy with HomeRoom. We actually have an underwriting team. We have a that actually will figure out the right
Mm,
properties. We have a data science team that forecast rent prices so that when you buy the property, the rent that we kind of like underwrite is going to be somewhat fairly accurate. Um, and then we have a network of lenders and brokers and agents who help purchase, and we have construction in each market to do the work.
oh,
So we'll do
cool.
everything from essentially a turnkey perspective.
Yeah.
A little bit, it's purchased and then we do the construction after. So not exactly turnkey, but pretty close. And
Yeah.
in the sense that you won't really have to do anything except for write some checks.
Yeah.
And then if you have a property already, we're happy to tell you if it's a good idea to do roommate rent by the room. And if you want to onboard it as the homeroom property, we have like instructions. Or you can add some rooms if you want to get a bit more revenue, and we could do that for you. We could tell you how.
Sure.
But yeah, we have a few hundred homes, and some have come through each channel, and we're able to kind of tell you if it's a good idea. There's a lot of homes that it's a bad idea to rent by the room because you may not get as much rent, or the areas doesn't have enough demand based on our data team.
Yeah.
So we really want to make sure that if you're going to do this, you want to make sure it works, right? And so that's part of what we ensure as well.
You got demand. Obviously, that's a key, right? But beyond demand, what would make a house not a very good fit?
Just a number of things. HOA neighborhoods, they're not my favorite in general. If you live in an HOA, or anyone listening, if you live in an HOA, good for you. That's cool. They're really beautiful neighborhoods, but they also are like they have a lot of eyes.
Yeah. Yeah. Yeah.
It's like probably, it's a lot of eyes looking around, and a lot of them don't allow for roommate housing. And so it's like,
A lot of
and
regulations.
it, yeah, and then they can change their laws at any
Yeah.
time and
Yeah.
make it so roommate housing is illegal, or not illegal, but not allowed. And then
Yeah.
HOAs have like unilateral ability. Anyway, I can go about HOAs and what's, but we
Yeah.
generally
No,
don't
I
recommend
can get
HOAs.
that. Yeah. Yeah.
Yeah,
Definitely.
you're like, I get it. No HOAs. The other thing is we generally are looking for enough parking, right? Because we want to be great
Yep.
neighbors.
Yep.
That's part of the reason we have the exterior video doorbells, and we're looking all the time is because we really want neighbors to be like, okay, it seems like that living situation is a little different, but it's not causing my life to be any worse. And in fact,
Yep.
their front yard is really well kept. And so that's important. I also want to make sure there's enough rent. Like a 2-bedroom house, the room economy is different than the house economy. No one cares if a house rents for 3,000 and it's a 2 bedroom, and they're not people don't say, oh, the house would be 3,000, I'm going to pay 1,500 for rent for the room. They think in terms of a room.
Yep.
And so generally more rooms is going to get you more money. And so each city has its own rules around that. And so you have to be mindful of those regulations. And so we kind of like track those, and we have our own strategies around talking to cities and all that stuff. So yeah, there's a lot of pieces, and we're happy to kind of help people think about it if they're going to do it themselves. We do recommend using HomeRoom because we got really good at it, and it's kind of a headache to do by yourself.
Yeah, and that's why I really like what you guys have done, because it does seem like, it certainly can be done by yourself, right? You did it by yourself. Other people do it by yourself, but it seems like a lot of the systems, a lot of the like kind of that, hey, we've worked out some of this pain in the butt kind of kinks. We've worked that out. And so now you've got a system kind of built for you, which is really cool. Yeah. And then definitely city regulations. I know in like our city, so I've got some rentals that are, college rentals, and you can't have, it can be 4 or less unrelated adults living in the house together. So you couldn't have 5 people. Even if you got a 5 bedroom, you can't have 5 unrelated people living in the house together. So, you got to understand that if you're all of a sudden renting and you got too many people in there, city comes
Yeah,
by.
we don't we're not a
issue.
big fan of we're not a big fan of those laws.
Yeah.
For one
Yeah,
thing.
for sure.
We just it doesn't seem to make a lot of sense,
It
especially in
doesn't
like,
make sense. Yeah, you're right.
yeah.
They generally don't make a lot of sense, but since when does city government regulations make sense? So
Not a lot. Not a lot. That's
yeah,
not,
right.
yeah. So yeah, we have strategies there too, and we're mindful of what's allowed and
Yep.
what's regulated and what's enforced and all that stuff. So
Yep. Um. So what is your generate? You said the average, the typical age is like 26 or so. Is that
it's actually scooted up. It was 26
screwed
during
up?
the pandemic. It's now in the later 20s,
Yeah,
29, almost 30. We're starting to get a bit older at home. We're growing up, I
growing up
guess.
a bit.
So we're growing up a bit. Look at us. It's beautiful to see. Yeah, but that's really the average. It's people right out of college most of the time.
Yeah,
We're not really focused on college housing, but it is something that we could do, I think, quite easily. It would be a different service offering because college kids are a different customer than our
for
core
sure,
usually is.
for
Yeah.
sure. Yeah, it
And
makes
they're a lot
sense.
more they're a lot more energetic. And
Yeah, yeah. They just got out of mom and
someone's
dad's home, and sometimes,
potentially destructive.
yeah, sometimes they want to just let loose. So, uh, that's how it goes. Um,
We don't have people letting loose at homerooms. That's not our thing.
that's
We
not your thing.
Yeah, not
That's,
our thing.
well,
Yeah.
let's talk about the business growth and some of the lessons you've learned through the business growth. I mean, you've got this startup. You started with, really ultimately not much experience, or really no experience. If you look at your background, I mean, it's not like you were in real estate. You're a financial analyst, so definitely had the financial background, but not necessarily the real estate or property management background. So take me through some of those big kind of lessons that really could be applicable to our listeners of, you know, having a startup and start basically bootstrapping your way up.
Yeah, I mean, big lessons. I think one of the biggest lessons is, you know, when you get started, when you get going, like as the moment the beginning time when you have to look at your opportunity and look at like the unit economics and look at like how much you'll get paid for the service and how willing people are to pay for a service is like is the calm before the storm of it actually starting. And I think spending a little bit more time than you want is good. I think that you have to balance that with people that are waiting to take action for a long period of time. But I think
Yeah,
at the very beginning, a business is a 5, 10 year kind of trajectory, and so spending a little bit more time being like, what part of this business is going to pay out? What are the risk factors? All that's really important. A lot of the challenges we had early is that some of our expectations around everything were a bit too optimistic. We didn't factor in some of the risks, so we got punched in the teeth a good amount of times for a couple years while we learned like, okay, we got to get a lot better. We got to be more professional at this stuff. And we've gotten, we have everything in place today, which is great. But it took a lot of painful learnings to get to the realities of life can be tough, especially in a startup where no one is doing it, no one's done it before, and or no one's done it successfully before.
Yeah.
And so you're kind of like going into this space where it seems like it's going to be awesome, and then a lot of the times there's a lot of pain. And so it's been a
Well,
really valuable journey. It's been pretty amazing, but it is always it's a big climb. And so be prepped, make sure that you're climbing the right mountain. All that stuff's really, really important.
yeah, I think that's so important to put some intentional thought into how you're growing. How are you growing this, not just today, right? But what's it going to look like in 5, 10 years from now? And how are you growing it? A lot of people, I mean, taking action is so important. And I talk about it all the time on the podcast. Is like you can get all educated as much as you want and do all the right steps. But if you don't take action, you're just not going to be successful. But it's also you're not going to be successful if you just take action, but you don't have any of the thoughts behind it, right? So it goes both ways. There's maybe a
Right.
fine line there, right?
Yeah, I think taking action can be planning and
Yeah,
evaluating and scoping, right? Like I think they're doing the work should start immediately. Don't resist
yeah,
doing the actual
100%.
work, right? I think like, and I think that's where, the take action, totally agree with that. But I mean, take action doesn't always mean starting the business. It can mean working really difficult, working to look at regulations, to look at um leasing automation. In our case, is kind of examples like all these things that we've learned along the way. There's a chance we could have gotten there a lot faster with some.
Mm.
We jumped right in and learned from experience, which is good. But once you're starting to work, you have a lot less time to think.
Yeah.
You have a lot less time. You can adapt and learn from the market economy, but like I do think like take some time at the beginning to really do work before the business is started. I think that's very valuable.
Yeah, couldn't agree more, especially on a startup, especially like you said, if you're in an industry that nobody's doing it or nobody's done it successfully before you, uh, to just take that time to really think about it, really put your business plan together, really understand what kind of systems and automation you need to put in place and all that kind of stuff. You take a little bit more time, and it doesn't have to be forever. Take a little bit more time, you're probably going to have a lot more success in the end. And time
Yeah,
to
yeah.
think, right? Time to think is the key. Once you start on your business, man, your head is under the water for several years. At least mine was. I couldn't breathe for probably 4 or 5 years.
Yeah, yeah, same. And the truth is like you cannot learn any better than like doing for sure. Like
Yeah.
it's hard to learn better than that. But you can if you really have the discipline to look at things really, really hard and you do the work. And I'm talking about like you instead of 10 hours a day launching the business, doing 10 hours a day really working on it,
Yeah.
preparing, thinking, strategizing, looking at holes potentially and like address those before you get started. Save yourself the trouble of exuberant optimism, right? Like we started exuberantly optimistic in 2018, ran to a wall. Um, we had to lay off a bunch of people like pretty quickly. Then I was me in a basement for a year
Mm.
learning and putting those things together. And so I would say like, and now we have a team of 50 now, now that it's working really well. But looking back, I would have probably, if I would have started with more planning and less action, it actually would have been better. Which we don't want to encourage people to not take action, but I'm just saying that action can look at like planning
Yeah.
sometimes.
Yeah, absolutely. Couldn't agree more. You talk about obviously you talked about some of the lessons, but you mentioned getting punched in the teeth. What's other than maybe what we've talked about? What's a you know mistake that you've made in the business, and how have you learned from it? How can you pass that down to our listeners?
Hmm. I think there's some of them are cliche, but one is like hiring great is always worth the extra time, I
Yeah.
think, and hiring really fast is almost never a good idea, even if,
Right.
and I think that goes especially for people in like your personal network, right? I think there's like an impulse in almost everyone to be like, oh, I know Bob from like he does finance at, Google or something. Like he would be perfect for my head of finance of my company. That's um because we know each other. But that's not how you build a team, right? You don't build a team from people that you don't build a great team that way. You can build a team that way, but the great team member is the person that you're like, this is exactly what I need.
Yep.
I'm gonna like play with it. I'm gonna get that person. I'm gonna interview a bunch of people,
Yep.
and then I'm gonna put them through some skills tests and get the right person. Whenever we do that, we get our team gets way better and our company gets a lot more fun. Whenever we do the other option, which is like, oh yeah, this is an advisor, we'll just slap them in here, or anything like that, it ends up being a lot more painful because they don't know what to expect. We don't know what to expect. We haven't vetted them fully. We don't know what to expect from their performance.
Right.
So that's one of the things is build teams thoughtfully with a lot of yeah, forethought, I think.
Do you got any daily habits that you do either, before you really get your day going, or maybe it's at lunchtime or before you go to bed? Do you have any daily habits that you do that you really rely on?
I like to get to the gym in the morning. That's typically my go-to is like got to get to the gym in the morning. It means the cool thing about the gym is like you're walking, so you get a little movement. You get out of the house because I work at home, which
Yep.
is kind of cool. But also like if you just like start working in the morning, you don't get out of the house. It's just like, oh man.
Yeah.
Um, and then you get a little sun kind of on your drive, and then you're walking to the gym.
If
And
you
then
live
I
in
like to
San Diego, yes. Not
if you
not if
live in
you're in
San
Minnesota.
Diego, oh
Minnesota.
yeah, if you're Minnesota, you don't want to leave the house at all because
Yeah.
it's tundra. So I think one of my habits is move to San Diego.
Yeah.
But and then I walk into there's a store next to my gym. I get like a fresh fruits and vegetables and a lot of times like some fish that I'll eat
Mm.
for kind of breakfast lunch. And if I do that stuff, I feel pretty good. I try to take a break
Mm.
midday, get outside again.
Yeah.
Um, so those are the main things. It's really about movement, sun, mental breaks. When I'll be in meetings sometimes that I lead, which is much harder than meetings that you just attend and like take notes. I miss those meetings. Sometimes like 2 or 3 hour, 4 and back to back. So at a certain point, I start to just lose it a little bit. So that's
Yeah.
when I try to set a break for myself, go out, breathe, you know,
Yeah, man.
and
I hear you.
and just look. Yeah. So
Even in the frozen tundra, like just getting outside. Yeah, I don't care if it's 30 below. I like to get outside. Well, maybe not when it's 30 below, when it's 20 below. I like to get outside just for a little bit. And you can't stand it out there for too long when it's that cold. But hey, you just got to get outside. You got to move a little bit. And yeah, for me, that does a ton. All right, cool stuff. So a couple last questions before we wrap up. What's your favorite book?
yeah, I, my favorite is the 50th Law by Robert Greene. It's a interesting collaboration between 50 Cent and Robert Greene, which is like if it's like which is kind of I think that's why I liked it so much is it's just quirky and weird. But the premise is really for thousands of years we were really fearful of actual dangers in our lives, or actual dangers in the environment. Like a
Yep.
lion could eat us, we
Yep.
could freeze to death, we could starve to death. um, that fear is like still very much inside of us. And because we have no real dangers, our minds cling to other fears,
Create
replacing
fears.
like replacing real fear of actual death with like fear of social media likes and all these other things. And so of not getting a new job, not launching a company, of not
Yep.
walking up to a girl and asking for a phone number. Like we feel the same level of fear as like our ancestors felt when there was like a saber tooth kind of like roaming nearby, right? It just kind of is. It's crazy the level of fear we have in our day-to-day lives with the amount of safety we have in our day-to-day lives. And so it really is just talking about like let's take bold action is something we talk about a lot, but like it's not even that bold because there's not really that many real dangers in today's society.
Yeah.
And so
Yeah.
it kind of just reframes that. And so it's taking action because there's nothing to be really to be afraid of is what I is kind of the premise.
Yeah. Fear can be a very powerful limiting limiting belief or limiting, factor in our lives. Definitely. Okay. What are your three pillars of wealth creation?
Three pillars of wealth creation. Yeah, I think the first one is real estate investing. I think I like, buying primary residence, buying loans with buying homes with primary residence loans, I think is the most slam dunk wealth building option in like the universe. It doesn't matter where you live.
Yep.
Um, I think it's really valuable. I think the approach of buying and then renting out, buying with primary residence locally and then renting that property out, can't get much better than
Yeah.
that. Even in, we're looking at maybe 12 months of properties prices being flat or potentially down, still a great deal, right? You're still paying down the mortgage. You're still leveraging your money like 33 to 1 in like the best probably asset class
Yep.
in maybe in the world, right? Is real
Yep.
United States real estate.
Yeah. And even though
Um,
interest rates are high, it's still cheap money. Even though they've gone up, it's
those.
still cheap money.
Yeah, it's still cheap. I mean, like, and we know that property prices will be up in 5 years by a
Yeah.
lot.
Yeah.
And you may have put in $10,000 to buy a $300,000 house because you did an FHA loan. Like it's a crazy deal. Um, I got to seven figures in net worth just by doing that in Austin for like 3 years, right? So it's like Austin is uniquely appreciating market, but like I would do it in Pittsburgh if I lived there, right? I did that in Kansas
Yep.
City. So I think that's one of my big things is like the combination of the conventional loan and American real estate creates the biggest opportunity for wealth creation in the United States and the
Yeah.
world, frankly.
Yeah.
Um, and yeah, another one is you can build you can you if you combine your core, like everyone has expertise and experience in some areas, and if you double down on those key areas and you can, that's where you really can drive value. So in my case, I was really good in financial analysis. I had done some on my own property management, and I'd done a lot of real estate analysis. So that's where I put all my time and focus. And like we were able to drive in our last fundraising round, we did quite well valuation wise, just because I took my strengths and built a system around it that meant I don't have to be that stressed every day because we have a great team in place that's running the key aspects of the business.
Love it.
Yeah. And the other one is, balance your budget every month because
Hmm.
especially when you get to bigger things, you start to lose track of where your money's going. Your business's money, your personal money. It's annoying
Yeah.
and it's homework, but
Yeah.
the challenge with getting when you start to get into any league, you have to do it. But as you get into like you graduate into a different league, it gets harder, but it becomes almost more important because you'll start to like squander money that you didn't even realize what you were losing. So
Yeah, oh man. Yes. That's a whole podcast in itself. I mean, it's so easy to lose sight of that. And money, it's crazy how easy it is to have money missing, AR, or just, you know, there's there's so many places it can go and hide. It's amazing. And so if you're balancing your budget, if you're looking at where's the money flowing, you're gonna you're gonna catch an amazing amount of stuff. Even if you have a professional bookkeeper and all that kind of stuff, you're gonna catch an amazing amount of stuff if you're keeping your eye on it. So
yeah, and you may, and what the real value will be is like if it's a business and you see a problem, you may be able to fix something much bigger upstream,
yeah,
right? You're like, okay,
yeah,
maybe the way that we even have this set up is completely wrong and we need to fix this because we're not collecting the money that we're billing. So
right.
it's not really revenue, right?
Yep.
So we do monthly, P&L reviews. We do weekly, rent property room pricing reviews. We do all these
Mm,
things, just check in the health of the unit economics of the business. So
cool. All right. Well, man, anything else that you want to add to our listeners? Anything that's on the top of your head?
yeah, I mean the one thing that I'm trying to say, we're trying to be careful with how we say this because we're really trying to build something that people win, and we're not like, you know don't worry about it. Just move in and buy a bunch of real estate now. But I do think that there's some advantages to buying in this part of the market, right? And I would say that you have to be mindful of the exact micro market you're in. But certain parts of the real estate market, let's say in the $200,000 to $300,000 range, have shown a lot of resilience to price. Like we have not seen prices going down, but what we have seen is the competition has like cleared out, and so we don't have a crystal ball. Could prices even in that like Kansas City, Midwest, go down? Yes, but do we think it'll go down double digits? Probably not.
Right.
And what we certainly are seeing is you can buy properties at list now. So a year ago, people were buying at 20, 30, 40%,
Yeah.
40,000 above list. In Austin, it was
Yeah.
100,000 above list. And when you run like the numbers on that deal, that out of pocket that you're throwing in, it just decimates your ROI because you're not leveraging your money as much. So today you can buy fully leveraged, less out of pocket, and you may see a dip in valuation 12 to 18 months potentially, but at that price point, I don't really expect much. And you're a much better place to buy today than you were a year ago, for
Yep.
sure. Second, the market starts going up again. We think that the competition will come back because we still have like an inventory shortage. So it's kind of like this weird thing where it's like, why would I buy an asset that's going to potentially go down a bit? It's like, well, it's a lot easier to buy now, and you can
Yeah.
buy without having to come out of pocket more, right?
Yeah.
So maybe you can buy three houses instead of two, and three houses instead of two at the same price point without the extra capital. Your returns over 5, 10 years, 15, 20 years, and all of our modeling is substantially better. So
Yep.
we think we would, if you said, should I buy now or should I buy 18 months ago? I'd say this is the best time we've seen in the last 2 years to buy. Will there be even a better time? We're not sure. But the second the market starts to go up again, we think that we'll seeing prices have to be topped again, and that's when the inflection point and the deals they look good because it's going up, but it's not as good of a return.
Yeah, I get people that say, "Well, should I just wait till the interest rates go back down?" And the answer to me, the answer is absolutely not. Like now's a great time to buy because interest rates are high. So if you can buy a property and it cash flows, then when interest rates do go down, you can refinance. And instead of waiting till interest rates go down and then the prices go up, and now you're buying at a higher inflated price, yeah, certainly
Yeah.
with lower interest rates, but just refinance then if the mortgage rates go down. So yeah, I
And
agree.
you can't refinance the price, like
Can't
you
refinance the
can't.
price, right?
Yeah,
No.
it doesn't work that way.
Yeah, I mean, people that bought in 2006, they certainly had some time where their property value was a lot less, but it went back up. And anybody who bought in 2006, today their property is worth a whole heap of a lot more money. Plus, they paid on a lot of principal debt. So as long as they cash flowed and they kept the property, they're doing just fine. So
Yeah, exactly. As long as the rents are stable and we have no indication of rents going down, inflation will drive rents. Um, what's your thoughts on the market? You said 2006. Do you think that we're in store for something that looks like 2008, 2011?
no, I don't think so. I mean, I certainly think there's a possibility that we'll see some declines, and possibly, um, possibly in some markets a decent amount, but at the same time, what when you look at just history, we haven't had a lot of times where the markets went down by more than 5%. It just hasn't happened. Just typically doesn't happen. The last time it went down by more than 5%, obviously, was the Great Recession, but the time before that was the Great Depression. So we just don't see a lot of time where the market goes down big time. Now, we did see prices drive up massively, right? They drove up 20, 30% in markets, maybe even more, depending on the market you're in. So even if they went down 20%, you're still doing fine and they're going to bounce back up. And like you said, it's going to bounce back up. So I'm not too worried as long as you can cash flow, right? It's about the fundamentals still. And you know what? If they go down and you've got cash flowing assets, then buy more. Like if prices go down and you got good cash flow and assets, go buy a bunch more, like buy everything you get your hands on. So I watched a lot of people. I started investing in 2008 and prices were going down from 2008, 2010, 2012. Prices were still going down. And I watched a lot of people who said they're going to wait for the bottom. And everybody that waited for the bottom didn't get in until about 2013 or 2014 when the prices were driving up really quickly. And so they got a lot less deals at that time. They bought a lot less real estate than what they could have. And they probably lost a lot of potential profits. So,
Yeah, I think it's consistently moving cash into the asset class you believe in, right?
100%.
And like you, yeah, and with some very few exceptions. If you believe in crypto, I'm not sure because that's not really my thing. But if you believe in tech stocks, probably a good time to buy, even if it keeps going down. Same with real estate. I agree.
As long as as long as you pay attention, you know what you're doing, and you're surrounding yourself with the right people, right? That's what matters. If you're just going to go blindly buy a bunch of tech stocks, you're probably going to miss on a bunch of them. If you're going to go blindly buy a bunch of real estate without really putting much thought into it, you're probably going to miss on it. So
agreed.
Just understand what you're buying.
Yes, 100%. The old Warren Buffett adage, or you invest in what you know, right?
Invest in what you know.
And so I would definitely 100% agree with that, right? Do not blindly invest in anything, and that includes co-living homes. Even though it sounds amazing, if you just go for it, world of pain coming for you, probably.
Yeah, so. I mean, and that's why I've asked some of those questions. Like, man, it sounds like it'd be a lot of work, and you answered that well with just having the systems in place and understanding and having the right people in place, and if you have that stuff in place, you're certainly mitigating your risk. There's always risk no matter what you invest in, but as long as you have the right pieces in place and the right people in place, you're going to mitigate a lot of your risk, and that's definitely a beautiful thing of what you've built. With that said, Johnny, how can our listeners get in touch with you, learn more about what you got going on, and connect?
Sure. Yeah. So you can take a spin and look at HomeRoom at livehomeroom.com. If you want to purchase the co-living property or rent by the room property for awesome cash yield, you can do that at livehomeroom-invest. And our team, our guys are real estate investors themselves. They also come from like financial advisory firms, so they understand finance and real estate really, really well. You can also reach me at johnny@livehomeroom.com. I started by buying my own properties and renting out rooms, and I learned a lot. And if you have specific questions about house hacking, that's what they call it in the bigger pockets, which is a cool name. I'm happy to give you some thoughts. If you want to send me some questions, happy to help out. I think it's affordable housing solution lies in repurposing current space. It's much cheaper. It's almost impossible to build affordable things with new construction prices and new special materials. So we have to reuse and repurpose, and that's probably malls at some point, right? And it's I think single family homes have a lot of opportunity. There's like 1,000 square feet per person in the United States available, but we're just not using it as efficiently as we could. So that's really what we're looking to do, and happy to help anyone that wants to do that themselves.
Cool. Awesome. Well, again, really appreciate it. And you have a fantastic rest of the day.
Thanks, Todd. Really appreciate it, man.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it.
And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out. And we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.